Who's warning of a pullback in the market, sort of like what Mark is saying he's looking for. But once stocks take a dip, he says get in and buy.
Joining us now is Yu-Dee Chang. He is chief trader of Ace Investment Strategies. I don't know if you heard Mark there, but he is expecting a pullback. I've heard you say similar things.
Yeah, but I'm slightly different from him. I do agree that I think evaluation-wise, we have gotten overdone a little bit. But on the short-term basis, I think we're in this blow-off stage. I actually believe there's a little bit more to go to the upside before we pull back. But I do agree. I think right now, on the short-term basis, it looks higher. But I think right now the risk actually outweighs the reward.
Okay,
so I would rather see a pullback before I start getting into this market.
Let's say you're right, Yu-Dee. What do? You start buying, but how do you know there isn't more to go to the downside?
Yeah, no, that's a good point. Let me tell you what we've been doing. You know, despite the fact that we're cautious on the market, we will still, like everybody else, has to chase after this yield, right? That's why the so-called risk trade. So we're still in the market actually long.
Stand by 1 second. Yu-Dee, we've got MetLife earnings, and Sandra Smith has them. Sandra, how'd they do?
Earnings coming at $1.31 a share. That's a beat for MetLife. Liz, analysts were looking for $1.24. And also, we're just seeing a slight miss as far as revenues, but pretty much right in line, $16.75 billion for the quarter. Analysts were looking for $16.8.
All right. Let me go to Yu-Dee. You know, it's interesting what's happening with MetLife. They are trying to sell their depository business to General Electric. They're trying to sort of redefine themselves as something other than a bank holding company so that they wouldn't be subject to the scrutiny by the Federal Reserve. They'd be monitored by local officials, local bank regulators. Is that something that we're going to be seeing more of? Because during the TARP years, everybody wanted to be a bank so that they could get TARP money. Now banks are beginning to move away from that, Yu-Dee.
Absolutely. You have actually said it very correctly. I think that is a good move, and the street actually likes it. Basically, they don't really bring in too much earnings from that business, so they're trying to get rid of it. So they'll be, like you said, subjected to less stringent regulations. I think that's a good move. I think the overall market is concerned. Earnings are very interesting. Right now, before today, we had 235 companies out of 358 beat earnings, and that's about 61%. Historically, earnings beat rate is about 62%. So we're pretty much around target.
For Yu-Dee, one more second. We've got Zynga numbers right now. Sandra, let's hear how their first earnings report as a publicly traded company looks.
And profits beat expectations. Earnings of 5 cents a share. That beat the analyst estimate of 3 cents a share for the social gaming company. Revenues also beat. They were up 59% for the quarter at $311.2 million. Analysts were looking for just over $301 million. So they're saying that their gaming revenues were $283 million. Guys, the stock is actually falling on this report right now. And I did see some comments that the company was making about their outlook. I'm going to continue to look at this. They're saying, quote, growth will be weighted towards the back half of the year with slower sequential growth in the first half of the year. Remember, a lot of Facebook watchers definitely watching this stock. Facebook gets a big chunk of their revenues from this company.
The single largest revenue contributor to Facebook is Zynga. Shibani, if anybody knows the answer to this, it's Shibani. Shibani, how could they beat on both ends and still end up with a bid lower than the close?
Two reasons. We know what the official sort of analyst reaction was, the analyst expectation was, which was $302 million. But the whisper numbers that I was hearing was between $310 and $320 million. And so it came in at the low end of the spectrum there. Sandra was talking about the projections. Fiscal year 2012 bookings looking to come in at $1.3 to $1.45 billion. Again, back half of the year weighted. I think those are the two factors why we're seeing a pullback in Zynga shares. $1.92 billion in cash. And the stock, frankly, has seen a tremendous run up about 37% just this month alone. A lot of it from the hype and the excitement that the Facebook S1 created in this stock. So maybe a lot of push and pull between what is in the numbers and then actually the run up that we've seen just over the last few weeks as well.
Right. And again, people are getting used to this company. They, when you see that outlook that Sandra just articulated, that some people don't quite yet have the ability to wrap their mind around it. Yu-Dee, looking at all stocks, whether they're the Zyngas or the Peets, the MetLifes or the Tanger outlets, that we're still waiting for Tanger. What would you buy here? Are there certain sectors, certain names you'd buy when you do see that eventual pullback that you predict?
You know what's kind of interesting? Where at the end of it, for different reasons, a lot of people are buying the same stock. Like personally, we like the so-called international hegemons, the one with the global footprints, the one is exposed to the emerging markets, the one actually have great credit ratings, so they could issue bonds with debt and borrow at the current record low interest rate level with their so-called structure, be able to expand their marketplace. Stocks such as McDonald's, such as IBM, such as Coca-Cola and Procter & Gamble.
Okay, we're going to get more specifics from Yu-Dee in a second, but we have more earnings from Sandra. Go ahead, Sandra.
Tanger Outlets is out in a bit of a mixed report here. Profits coming in at 15 cents a share. Analysts were looking for 17 cents, so a miss of 2 pennies there. However, sales did manage to beat forecasts, coming at 89.1 million for the quarter, and that beat estimates of 87.93 million. So mixed, but profits did miss by 2 pennies there, guys.
That's almost a wholesale pure play outlet mall kind of shopping mall, Yu-Dee, and that is in a way a testament to how the consumer perhaps is behaving these days.
Yeah, that's true. Basically, you're talking about moral. Basically, still a lot of money are being borrowed to prop up the so-called consumer confidence and consumer spending, and that's what we're seeing. You're absolutely right. Basically, they operate at pretty much the outlet malls, and that's all they do.
All right, Yu-Dee, terrific stuff. Yu-Dee Chang, thank you very much. We are expecting an update, by the way, on Warren Buffett's Berkshire Hathaway in this hour. Also, we